Hello everyone, class 12th accounts. The topic is fundamentals of partnership for this session. And today I'll be discussing the journal entries, basic journal entries to be passed in the first chapter of partnership. For that, we have to consider the various points in the partnership deed which are relevant for accounting. So points in partnership deed important for accounting are: number 1, interest on capital; number 2, interest on drawings; third is salary or commission to a partner; fourth is interest on loan borrowed from a partner; fifth is rent allowed to a partner; and profit sharing ratio. I'll be discussing these points in detail as I take up one point at a time. Next point to be noted is a new account which we'll be making in partnership, that is profit and loss appropriation account. See, in class 11th we have done final accounts of a sole trader, in which you used to prepare trading account, profit and loss account and the balance sheet. But in partnership, the net profit as calculated through profit and loss appropriation account is not taken straight away to the balance sheet and added to the capital. No, because that net profit has to be divided among the partners. Therefore, as you can see, final accounts of partnership firm comprise of trading account, profit and loss account, profit and loss appropriation account, which is being shown in bold, and then balance sheet. The word appropriation, children, actually means division or distribution. So the net profit which you arrive at in profit and loss account has to be divided, has to be distributed. That's why we prepare profit and loss appropriation account. Its definition is like that: P&L appropriation account, you call it in short profit and loss appropriation account or P&L appropriation account, is prepared to divide the profit among the partners and to give effect to the adjustments as per the partnership deed, which I just mentioned. What are the adjustments as per the partnership deed? These: interest on capital, interest on drawing, salary or commission to a partner. So that's why we prepare profit and loss appropriation account in partnership. Now we move on to the journal entries. So first is interest on capital. So to understand this, first let's understand the concept of interest on capital. See, so what is interest on capital basically? Here's the business owner, or in this case I'm making two because we are doing partnership. These are the partners and here is the business firm. Okay, now what's happening is capital is provided by the business owner, that is in this case the partners provide capital to the business firm. Therefore, if you observe about loan, when a person borrows loan from the other person or the bank, so the person who's lending, the institution who's lending the money is the money lender or the lender, and the person who's borrowing becomes the borrower. Here we are applying the concept of business entity concept, which says keep the identity of the business owner separate and distinct from the identity of the business firm. So here we have to relate with the example which I gave you of money lending. When partners are giving capital, investing capital in the business firm, which is a separate entity for accounting purpose, in a way we can relate that business firm is playing the role of the borrower and the partners are playing the role of lender. So because business firm is playing the role of borrower in this case, therefore the business firm will have to pay interest on capital, on this capital, to the partner. See, I'm indicating this with arrows: interest on capital. Now we are doing accounting from the point of view of the business, and business is paying this interest. Hence, For business, what is it? It's an expense. And as you know, children, expenses come under nominal account. So nominal account rule is applicable, which says debit all expenses and losses. Hence, interest on capital will be debited in the journal entry. Okay, so the entry will be, if you have understood this much, so I'll proceed with the thing. So the entry will be interest on capital account is going to be debited. We'll debit because it's a business expense. Okay, and it is not paid in cash to the partners, children. It is added on the capital account, added to the capital account of the partners. So what will happen? The capital accounts will increase. And we have done the basic rule of accounts in class 11. To increase capital account, we credit it. And to decrease capital account, we debit it. Here capital account is increasing. So what are we going to create? To partners capital accounts. And we'll pass the narration being interest on capital provided. Okay, and after this, we'll pass the closing entry. In the closing entry, you know what we'll do? The account, new account which I told you, P&L appropriation account, profit and loss appropriation account will be debited, and we are transferring basically interest on capital. So how can we transfer that? In the first entry, it is debited, as you can see here. We'll credit it. We'll do the opposite. That only then the account, interest on capital account, will close. So interest on capital account. Fine. So the narration will be being interest on capital transferred to profit and loss appropriation account. Fine. Now we move to the next concept. And the second concept is of, the second point in the deed was of interest on drawings. To understand it, just pay attention. Here again I am making the partners and on the other hand I am making the business firm, that is the partnership firm. I'm writing business firm. For accounting purpose, we have to keep the identity of the partners separate from the identity of the business firm. Now, when partners, what is drawing? Basically, money withdrawn by the owners or owner from the business for personal use. So in case of drawings, the money will flow as indicated by the arrow from the business firm towards the partner. This is drawings. Now, here again we'll relate with the case of lender and borrower. So in this case, we can say that partners are playing the role of borrower and the business firm is playing the role of lender, money lender. So the borrower has to pay interest in return to the lender. So in this case, partners are going to pay interest on drawings to the business firm. Now we have to view it from the point of view of the business. Interest on drawing is coming in. Hence, what is it for the business? It's income. And children, incomes come under nominal account. Nominal account rule says debit all expenses and losses and credit all incomes and gains. Therefore, income has to be credited. That's why interest on drawing we will be crediting. So the entry for this will be, once you have understood this, the entry for this, children, will be, I'll just do that on the next slide. Okay. So interest on drawings. The journal entry, first one will be partners capital accounts will be debited. I'll explain to you the logic why. And as I told you, interest on drawings account will be created because I just explained to you, for the business, interest on drawing is an income, hence we'll credit. But this is charged from the partners, and how it is charged? It is deducted. Interest on drawing amount is deducted from the capital account of the partners. So there's a basic rule of capital account, accounting rule regarding capital account. To increase capital account, we credit it, and to decrease capital account, we debit. In this case, because interest on drawings is being deducted from the capital, it results in decrease in capital. Hence, capital accounts have been debited. Narration will be being interest on drawings charged from the partners. And children, the second entry will be the transfer entry. In the we have to transfer interest on drawings. So in the first entry, as interest on drawings is credited, therefore in transfer entry it will be we'll do the opposite. Interest on drawings account we will debit. And where are we going to transfer this? To profit and loss appropriation account. To profit and loss appropriation account. Narration will be being interest on drawings transferred to profit and loss appropriation account. So right now in this session I have discussed with you interest on capital and interest on drawings journal entry. Thank you. We'll carry on with the salary or commission to a partner and other points of the deed in the next video.